So welcome back. So this was the trades which I took last week, last 3 days, from Wednesday, Thursday, and Friday. And on Monday and Tuesday there were some bad moves and I took some losses. But on Wednesday, Thursday, and on the last day, Friday, I got some good trades in Nasdaq, USD CAD, and GBP JPY. So first we will discuss the Nasdaq trade. This one. Okay. So in this Nasdaq trade, which we can see, it's a 15-minute time frame. Okay. And for our strategy, as I said, at 8:30, what happened is like it gave this type of big candle and it took the highs over here, okay, and then price came down to do what? If you guys can see little bit like this, it was creating a sort of trend line, okay, then it gave a trend line break. So now what all the retail traders will be thinking, like they will be thinking of selling this, right? And then they saw the breakout also of this one. And now if you guys can see that this low is also taken and there is a bank level of 17800 right over here, okay. So what happened? So price went down and took this low, and as I told you, our entry should be below this because we know that at this area there will be lots of stop losses. So I entered right over here because I didn't entered in a silver bullet, okay. From 10 to 11 I entered right over here because I saw the liquidity run right over here. That's why I took it, but otherwise I only trade from 10 to 11, okay. So now price went down and it took the low right over here, and now if you want you can go into 1 minute time frame, okay, and you can look for entries. If you trust this setup more, what you will do is you will just place your limits over here and you will place your stop loss like 15 points, and then you can forget about it, or you can just leave the computer alone and it will be keep on doing its own thing, right? But if you want a confirmation, because lots of people were saying that okay, we can enter right over here, as you said that we can enter over here, but we are a little bit worried that what if price keeps on falling down and down and down and we will get a stop loss, okay. So what I should say that if you're scared to do that, you can go into smaller time frames and then you can look for fair value gap entry or something like that, okay. So first thing is liquidity. First you should look for liquidity, okay, and the fair value gap is the entry thing. For entries you can use the fair value gap. So right now over here you can see that price went up, took this high, and as a normal ICT pattern of entry from fair value gap, price came down to this fair value gap and then it shorts towards the upside, okay. But the thing is we have to build and we have to see that what the noobs are doing in the market, right? What are they building, what they are thinking right now. They are seeing this trend line, they're seeing this zone as a support zone, okay, and now they are looking for some sort of sales and some sort of buy, and they're looking for buys also. Now this was the Nasdaq one. Now let's go on USD CAD. So this one is the USD CAD, okay. So in this USD CAD you can see that this was a previous day's high, and from way along I am telling this on my channel that on previous days highs and previous days lows there is a stop losses or liquidity because it's a turning point in the market, okay. So now what happens after that? In London kill zone, okay, price went up, takes that high right over here, it gives a market structure shift towards the downside, and you can see the beautiful fair value gap right over here. This candle goes up, fills the whole fair value gap till over here, and then it starts to fall. But my entry will be right over here because I trust my setup, so I will just enter right over here, just a little bit above this line, and I will place my stop loss like 15 pips or 20 pips. But if you want a confirmation, you can wait for this confirmation. But most of the time what happens is like in this type of setups, price will go up and then it will not retrace to the fair value gap and it will keep on falling. So that's why I just enter over here. So that's advanced. So for now you guys can use this fair value gap to enter or an order block to enter. So right now over here, okay, if you guys can see that this candle, okay, this candle was a demand zone, okay, whose price went up, it tapped into it, it gave a bullish engulfing, and then it was going up. So this is what the retail trader is thinking right now. And when this candle fell down like this, okay, their stop losses were taken. Those who trailed their stop loss below this, or their stop losses are just below this candle, right? This candle goes down, now they're worried. Some of them will close their trades and some of them will hope that it will go up from here. And after that, this candle, it went down and its body closed below this low. So now the retail traders will be thinking that this is a breakout. Yeah, right now this is a breakout and they will be looking for sells from this. So they will say that demand turned into supply, or like support turned into resistance type of thing. So now what we have to do is we have to just look for fair value gap a little bit below this liquidity pool. So over here there was a smaller one, but it's way much smaller, but we can see one good fair value gap right over here, okay. And there's a round psychological level also of 600 or something like that. I specifically use this one like 500, 800 and 000, this one. But the thing is you can enter from this type of fair value gap. So if you guys want to make your model only based on fair value gaps, then also you have to look for liquidity, okay. Just take the buys from those fair value gaps which are below that demand zone or which is above the supply zone. Use those fair value gaps. And on this GBP JPY, and this trade I posted on my Discord also, and I should show you the screenshot. Like this was the screenshot. Yesterday 3:14 on Friday I took this trade and it was over here, and I saw that what do you guys think over here. And after 5 hours or something, or like 3 hours I think, after 3 hours it hits 1-on-1 and then it goes for 1:2 and I close the trade, okay. So over here you can see that price was price took this low and it's an Asian session low also, okay. And after that, what happens in New York session, okay, you can see this type of candle. It goes just a little bit below of this London session, right? This relative equal lows. It just goes a little bit below to this relative equal lows, and then what happens? Price keeps on going up and up and up. Okay, and there is this round psychological level also, 188.300. Okay, you can take entry from there, and then it kept on going up. So this was the trade which I posted, and this is a good trade because you can look for trades below the session highs and lows also. So in this type of scenario, if you missed the London session move from here, you will get another chance, like 80 or 90% of the time you will get another chance to enter in the market in New York session. Okay, and on euro dollar, if you look this in euro dollar price on this Thursday, I guess on Thursday price went down below this, but it went a little bit deep and it hit my stop loss. Okay, because I took a buy over at this 1.07500, but it went a little bit below and I took a little bit smaller stop loss of 10 pips or something, I guess. But if I would have, and for those guys, those who want confirmation, you guys can see that on 15-minute chart, it's not a 5-minute chart, it's 15-minute chart. Okay, price goes a little bit above, gives a market structure shift, and it gives a fair value gap right over here in a liquidity pool. Okay, because people are looking for breakout right over here because they are seeing that this structure has broken this low, so they are looking for breakout over here. So it goes down, and then you can enter right over here, this fair value gap. And on Friday, you can see that first price went down where below this Asian session. Okay, it goes a little bit below the Asian session, and then you can look for a round psychological level. And what happens after that? Price goes up from here and then starts the New York kill zone, the New York session. It goes a little bit below of this candle's low. Okay, so all the traders, those who got in this trade, okay, when they will see that market has broken this structure, they will look for sells from this candle because they will be thinking that this is a supply zone. But we all know that we will take buy right over here because people are looking for breakout, right? They're looking for breakout trades, so they are trying to sell over here. But we have to do just opposite, and we can see one more thing, that above here there's a double top and market order flow is bullish. Okay, and that's the important thing. If you don't know the market short-term trend or short-term bias, you can be in a wrong position. So for example, if you are thinking that market is bearish, okay, and if you take a sell from here, just from here, or you can just take a sell above this from here, you will get a straight one-on-one. Okay, but then also eventually your stop loss or your break even will be targeted. Okay, right, like this. So that's why if you go with the trend, or if you go with the higher time frame order flow, if a higher time frame order flow is bullish and you identified correctly that higher time frame order flow was bullish, then only you will be able to find out this type of liquidity grab. Okay, it goes down, it takes this low, and then it keeps on going up from here, and then it targets what? This one. So people were selling right over here, but what happened after that? Like their stop losses will be taken, and now they were looking for buys at this candle's retest. But what happens in this? It just goes a little bit down and down and down, and then now it started to consolidate. And now if you go on USD JPY is also the same trade. And another thing of this USD JPY, I should say, that you can see this higher highs, this higher high, higher low, higher high, higher low. It's just making a trend type of thing. Okay, so it's making a trend line from here. But at right this moment, what happens? Like price goes down, it goes more down and takes this low. It takes the Asian low and it fools, like it makes fool of the people, those who are trading this, those who are thinking that it's creating a trend or it's a trend breakout. Okay, they will be thinking that this is a trend breakout and they will end up taking a sell from here. And it gave a retest also. I should show you in a live. USD JPY. Where was it? Yeah, it's over here. Okay, if you guys look at over here, it was making a trend like this. Okay, and then it gave a trend breakout and then it gave a retest and it fell down. It went a little bit below to take all the entries, all the stop losses from here, and it created a liquidity pool. Okay, it went down, took this low, Asian low, it take all the stop losses from here, and then it went up, and then it gave a this type of thing. And now some of the retail traders, they might be thinking that this is a retest to that trend line. Okay, and now they will be looking for sells one more time from here. Okay, but what we will do is, for confirmation, we will go on 5-minute time frame right over here, like this. So if you are afraid to take trade right over here, like a buy over here, because you think like it will keep on falling, so you can wait for a retest. So what happens after that? If you use this optimal trade entry, guess so, it didn't came from the wicks, it didn't came, but if you look at from the bodies of this candle, it came at the 705 level. You can take a buy right over here and you can target this high right over here, or you could have targeted these two double tops, because we know that there will be lots of liquidity right over here. But what happens after that? It takes the double top, but the bias was bullish. That's why it didn't give a sell from here. Okay, so you have to keep that in mind. You have to just look for the liquidity which are opposite to the trend. So if the trend is going bullish like this, making higher highs and higher lows, okay, you have to take a buy when it goes below this low. Okay, you have to take a buy right over here when it goes below this low, and then you have to take trade over here, and your target should be this high. But you should not take a buy, or you should not take a sell when price goes up and takes this high. You should not take a sell over here, because you will get a 1:1, but eventually market will make another higher high and it will keep on going up and up and up. Okay, so I hope you guys understood, and let's see next week what we will be going to do and what the market will give give us. So if you guys have any questions about this liquidity grab strategy, or like any questions or any doubt, you can message me on Instagram or Discord, or you can write down in the comment section that what are your questions, and I will make the video on the basis of your questions. Okay, if you guys like this content, so give me a like, share it with your friends, and subscribe. And until next time, wish you good luck and be safe.